So today we've got a Sunday video. Don't normally do Sunday videos, but I wanted to squeeze a talk about this stock in because I do really think this stock at the moment is a very cheap stock in the stock market and a stock that I am massively interested in. Now, I do already own this stock. I've owned this stock for around about 2 years, nearly 3 years now. But I think this last week, the share price has dropped and it's undeservedly dropped. It's one of those stocks that we talked about Card Factory a few days ago on the YouTube channel, and we say like, the share price on that stock was dropping for no reason. Like financially, it was performing absolutely amazing, and the share price kept going lower and lower. This is exactly the same. This is a stock that brought fantastic news out this week, and then the stock ended up dropping like 14% on the news, and it's like, why are you doing that? So now the stock is a very cheap valuation. I think it's one that I need to talk about because I think it's a very good opportunity in the stock market, and that stock is Inmode. So Inmode this week, if we actually just go on the last 5 days, you're going to see it's down 14%, especially when you look at that Wednesday. That's when it started dropping massively, and it trades at 15 times earnings and a 2.7 billion market cap company. And the news that caused it to drop was, like I said, it was positive news, and the stock dropped on the positive news, and it brought out its preliminary earnings. It normally brings out preliminary earnings to go, look, we're way ahead of what the market's thinking, and this is what we're going to come out with. And then preliminary earnings were absolutely fantastic, and we'll take a look at that in a second and why this stock did not deserve to drop because of them. But yeah, I mean, when you look at the stock, it did get all the way down to the $20 mark in about May time, and it has had a bit of rally with the market, but even so, I still think it is very, very cheap at the moment. And like I said, I own this stock for 2 years. I've owned it around about I started owning it around about June time in 2020, so you know, nearly 3 years now. And you can see here the stock is up over 133% since that time. But personally for me, I've been averaging up quite a bit, so I'm still like up 70% on this position. And the more that this kind of has stupid drops like it has done this week, I'll continue to buy it because I think it's a very, very cheap stock on the stock market. Now, very quickly, in case you don't know what Inmode does, they do non-invasive cosmetics to help people look better. So, for example, if you wanted some fat removed somewhere on your body, you might have to go under the knife, get it cut, get it all taken out. They have like technology, for example, that would burn the fat, and you know, this technology that you would use this device on your body, you don't have to go get put to sleep, you don't have to have be cut open for it. And that's only just one example of something that they do. They've got quite a few of these treatments out here. So obviously a very massive growing space, and obviously more people will prefer to have that sort of thing done rather than having to get put to sleep and having be put on the knife, really. And they keep bringing out more and more different technologies for different cosmetics that people would want doing. So obviously a massive growing space there. But if we just have a quick look at the preliminary earnings that caused the stock to go down, which should have happened because they were absolutely fantastic. And this company's been smashing financials in 2022. It's been one of my best performing financial stocks in 2022. And they said that they are going to expect revenue to be in the range of 453.9 million or in the range to 454.1 million. Now, if you look at the start of the year, what Inmode come out with, and they are a company that do tend to sandbag numbers quite a bit, but you'll see here that they expected the revenue to be in the range of 450 million to 425 million. So you can see from this point here that they have massively delivered on, or over delivered on, their revenue by nearly 40 million, which is absolutely insane on the revenue front. And on the EPS side of it, they were supposed to be a company that didn't really grow the profitability this year because previous years they haven't been paying tax, but now they have to start paying tax, and all the profit that grew with the revenue this year, that profit was supposed to get all taken up by the new tax payments they had to make. But they've even managed to still grow a profit this year as well, which is absolutely fantastic. And they didn't give any forecast on the EPS side of it, but on the revenue side of it, they said that they fantastic as well, because when we look at the forecast at the moment, analysts are actually expecting the revenues being 522 million. So you can see here that's a massive higher growth than what analysts were expecting so far this year. So potentially instead of this 16% year-over-year growth, we could be talking up to 18% year-over-year growth. And I would expect the more that the year goes on with Inmode, they tend to hike up their guidance as well. So I think we could see Inmode potentially putting in another 20% growth year, which is obviously, to be growing at 20% a year is absolutely fantastic. So that's obviously great. So you look at the preliminary earnings here, and obviously, you know, record revenue, with revenue growing being higher than what is expected this year, EPS higher than what's expected this year, and the 2023 guidance is even higher than what analysts are forecasting, which is you know, absolutely crazy. And you've got this company that could potentially be growing at nearly 18%. You know, this year instead of 16% what analysts were forecasting. And like I said, you know, you have this here where this positive preliminary earnings is then met with a 14% decline, which is just crazy. And then you start factoring what the company's trading at. You know, you look here and the company's trading at 15 times earnings. 15 times earnings for this business. A company that has just smashed it out of the park with, you know, the revenue growth, the EPS growth, and, you know, top ahead of expectations in 2023, which is absolutely fantastic. And you have it at this sort of valuation, which is just absolutely crazy. And it's when you look at a lot of the metrics as well, you know, when you look inside the business, and on a forward basis, it's an enterprise value to EBITDA of a 9, on a free cash flow, it's at a 12 times free cash flow. Normalized earnings on a forward basis, it's down at a 12, and you're picking up this company that's putting in this amount of growth and this execution and bringing out preliminary earnings, and it's this sort of valuation. It's just crazy. Like, for me, when you have a company growing at this sort of level and doing the numbers that they're doing and beating expectations as much as what Inmode are doing, this company should be over double where it should be, you know, right now. It should be double the share price, which is just absolutely crazy. And we did see in November time, you know, this stock nearly touched $100, and I think it will get back to the days of $100. But even right now in this bear market, I know we're in a bear market, but this stock is just massively getting disrespected for the financials it's putting in. It's just absolutely unbelievable. And I thought, you know what, I'm going to actually see what analysts are doing and forecasting the share price to be. I normally don't do this. I don't really take consideration into what analysts are expecting, because they're normally chasing the share price more often than not. But even when you look at what analysts are forecasting, you know, the low price at the moment is $44, the medium is $48, and the high is $60. So even they're still quite bullish on where the share price should be in the next 12 months. And I do agree. I think Inmode should be double where it is right now on a share price point of view. The only concerns that I have with Inmode is that when you look at the financials here, you know, what they've done in the last 12 months, what they're going to do in the next 12 months, the growth that they're doing and the profit they're driving up. The only concern I ever have is that the numbers are that good that you're like, are they legit? Like, that's the only question you have, is that because they're so good on the numbers, like, it is, and the numbers are legit. And that's the only thing. But, you know, I think that says a lot, that if you're looking at this business and saying the numbers are that good and they're legit, you know, I think that says a lot about how good they are. But yeah, it should at some point get a lot more fairer reflected on the share price. And the only little other concern that I do have about Inmode is that compared to what preliminary earnings Inmode historically have brought out, normally the growth and the beat has been a little bit more. So you can see here, for example, last time they grew 46% year over year growth, and it was a massively ahead of expectations. The beats and the growth is getting a little bit smaller than what it has done previously, which once again, you know, if you are, you know, lying about the numbers, then you won't be lying. Like, from this point of view, you won't be saying that you are a company that is slowing down slightly and not as beating the expectations as much as what you're doing previously. So that kind of confirms. And obviously as well, you know, the products are well known out there in the industry. They've all got very high reviews from the providers that use the products as well. So we know the legit products. But the beats are getting a little bit smaller than what they have done previously. But I think when you take it into context about what they are delivering and the financials and the metrics they trade at, I think it's just absolutely bonkers that it's at this sort of valuation, putting this growth in. So yeah, I think that this is a stock at the moment that is, when we talk about stocks that are financially performing absolutely amazing and the share price aren't reflecting it. Like, there has been a bit of a fair reflection recently, like it is up 45%, but I think generally we talk about Inmode, it should probably be double the share price where it is right now, which is just crazy. So thought we just mentioned that one about a stock that brought out some preliminary earnings on this weekend. They're actually they went down, and it was like, why? You know, it went down 15%, 14%. It should have gone up 14%, which is crazy. So would to add on a watch list, definitely, for sure. So yeah, hope you enjoyed the video anyway, guys, and catch you in a bit.